Well, taxes are what we're studying tonight. That's going to be really awesome, huh? Well, the questions that we hope they answer are what are taxes and how should they be levied? What kinds of taxes will you have to pay in your lifetime? And how does the U.S. government spend revenue they raise? So we'll look at a couple of those things throughout the presentation. I won't have a video on every slide. There'll be some charts and graphs I'm sure that you can look at your leisure and then move on to the next slide. The Constitution itself actually gives the government the right to collect taxes to fund government programs, whether it's for defense or for welfare or other programs that they deem necessary. A tax base is the value on which a tax is calculated, and that could be on income, so the more that you make, or on the property, the type of home that you buy, or on profits, and that might be from the business that you own. Many of these taxes are based on a principle of ability to pay, or other taxes are based on a benefits received principle. And you can see the diagram on the next slide to see what those look like. This is just a slide with a simple definition for taxes. It's just a required payment for the local, state, or national government, and it just pays for different things that a society would not pay for on their own, probably. You could look at stadiums, for example, for the Vikings or the Target Field. You could look at maybe some of the libraries or theater and arts that we have, and some of that's paid through state taxes or local taxes. And then on the national scale, you might look at military or other spending and uses of taxes. On the next slide, you'll take a look at some of the things that we have to work for during the day, whether it's for state and local taxes or national taxes, and then other things that we might have to purchase as well. So you can take a look at that slide. It's pretty interesting. Revenue is money that is brought in and generated by the government through taxing different people and corporations. And on the next several slides, you'll see where does our revenue come from, and also then what do we spend it on. So take a look at those. Deficit spending is an interesting term, one that you probably learned about in your U.S. history class when you were talking about the Great Depression. And it talks about when the government spending is in excess of what is collected in revenues. And sometimes they do that to try to get the economy going again. Income tax, then, is a tax on a person's paycheck that they earn. And these are progressive tax rates, is the type of tax structure that they fall under. And the incidence is on adults or married couples. And they can be levied by the federal, state, or local governments. I'm sure most of you know what an income tax is, as lots of you have jobs. Most of us know what a sales tax is. We do go shopping after all. And so it's just a tax on the dollar value of all the goods or services that are being sold. In Minnesota, we're kind of lucky because we don't have taxes on clothing, so we're fortunate there that the price on the price tag is actually what we pay. You go to a different state, and that might be the case. But of course, if we go and buy that $10,000 car, unfortunately, we find out that it might be closer to $12,000 when you start to include the sales tax. Sales tax, as we'll find out in a little bit, is also considered to be a regressive tax. Here's another example of a tax. There's a property tax. Lots of your parents probably pay a property tax if they own a house or a cabin here in Minnesota, and it's just a tax on the value of a property. Of course, one of the debates that have been going on is that as home prices have been going down, what's been happening to property taxes? Well, they've been going up. And so it's one of those debates that people often have. And the final one that we'll look at, and there's of course others, but the final one we'll look at in this presentation is corporate income tax. And that's a tax on the value of a company's profits. So the more money that you can make as a company, the more tax that you might end up paying. And of course, depending on if you're conservative or liberal, you'll see different plans that are proposed by different presidents. On the next slide, you'll also see some more types of taxes, and they're kind of interesting. They say whether or not they're proportional, regressive, or progressive. And so you can take a look at those and where those taxes, who they fall on. We're going to take a look at a couple of different tax structures, and I just kind of mentioned them on the last slide there. They're progressive, regressive, and proportional. So we'll define each of those in the coming slides. Progressive tax is the first tax structure that we'll look at, and that's pretty easy. The more you make, the more they're going to take. And some of the examples that we'll have that you can write down are federal income tax, corporate income tax, and the estate and inheritance tax. And those are in a couple of slides. The estate and inheritance tax, just so you know, that would be something that would be left to you in somebody's will. And you would think you would get all that money, but in fact, the more that they leave you, the more they're going to take. The next tax structure is regressive tax, a tax which a percentage of income paid in taxes decreases as income increases. An example of this would be a sales tax. Well, imagine if Taylor Swift and I both went to the store and bought some milk. Well, who's going to end up spending more of their percentage of income on that milk? Well, of course I am, with a smaller salary than what Taylor Swift is, especially with her new album coming out. So that would be a regressive tax. Excise taxes are another example that you'll see in a couple of slides. And an excise tax would be on something like cigarettes and alcohol, things that the government would like to control. The third one then is proportional tax, and this is a tax for which the percentage of income paid in taxes remains the same for all levels. And the ones I'm going to be writing down in just a little bit are property taxes, and user fees, and a flat tax. Those are all examples of a proportional tax. The last concept I'll talk about is inequality. And we're going to look at this graph below, and it's called the Lorenz curve. It's a graphical illustration of the extent of inequality in a country. The United States actually has more income inequality than most other industrialized countries. So what you see there is a line of perfect equality looking at the percentage of all income and the percentage of all houses. And then you see that dark line, and that's bowed out, and that's where we are actually at. Now the red line is what taxes have moved us towards. And so if we're trying to get closer to that line of equality, that's what sometimes taxes are used for, to help us get closer to that. It's not important that you can really necessarily draw this graph. What's important is you just understand what it's about, and it's about showing the inequality in the United States.